Fed Day is finally here and futures down a little bit in anticipation. 30 minutes until the start of trading. I'm Katie Greifeld.
And I'm Sonali Basak. Matt Miller is off today and Bloomberg Open Interest starts right now.
Coming up, it's the first Fed decision of 2025. A pause is expected as Chair Powell gears up for a presser with politics on the agenda. Defending America's tech dominance, Microsoft, Meta, and Tesla kick off the Mag 7 earnings parade just days after DeepSeek rattled Silicon Valley, Wall Street, and Washington. Plus, T-Mobile posts a big beat amid news that it's been secretly working with Apple and SpaceX to add Starlink access to iPhones. Details ahead on that Bloomberg scoop. But let's take a look at where these markets are trading. Of course, we have Chair Powell. We have the big tech earnings coming this afternoon. Where we sit right now on the S&P 500, a little bit lower in pre-market, trading down about 0.2%. The Nasdaq 100 trying to hang on to its pre-market gains, currently up about 0.1%. We had that big rebound yesterday, but Monday's session certainly left a dent in the overall week. We'll see how it changes over the next 48 hours or so with those earnings. And then you take a look at the bond market here. This is what you should keep an eye on over the next day or so, because the 10-year Treasury yield just about back at 4.5%, currently lower by almost 2 basis points. It's hard to say where the next 10 basis points of direction will come from.
What's the over-under here for you? Because do you think we break below 450 today?
I'm not a betting man. I can't say, but we'll ask a lot of smart people.
I'd put money on it, but I'm not telling you what I'm doing. Anyways, some stocks we're watching. T-Mobile had added more customers in the fourth quarter than expected, and its forecast for net customers also beat the average analyst estimate. We're going to talk more about T-Mobile in a moment. The shares are up about 7% pre-market. ASML also a big story this morning, up about 5.8%. It's rising the most in 5 years as the AI boom fuels demand for its chip-making machines. We're going to expect to hear much more about CapEx from big AI names tonight. That includes Microsoft, which is investigating whether a group linked to Chinese AI startup DeepSeek obtained data from OpenAI's technology without authorization. We're going to talk more about that as well. Microsoft, though, down about 0.2% pre-market. Also checking on shares of Trump Media, which announced its plans to offer financial services on Truth Social platforms. That will include ETFs, separately managed accounts, and crypto. You have Trump Media and Technology. DJT is the ticker, up almost 13% pre-market, Katie. This is quite a new area for that stock.
Yeah, absolutely. Just absolutely flying shares of DJT. And I wanted to take a look at the overall leaderboard right now when it comes to the sector level, because like the Fed, we're kind of in wait and see mode right now. All of the catalysts coming up in the afternoon. But if you take a look at the year-to-date performance, you can see where this week left a mark, because the only sector that is lower year-to-date is tech. You can see just down about 0.5%. Up at the top is communication services, where you have names such as Meta, such as Tesla. But in traditional tech, we have Microsoft and Apple, both of which reporting in the next couple of days. Microsoft specifically after the bell today. So this leaderboard could change drastically over the next 48 hours, of course, as we get the earnings and also maybe a little bit of detail from the executives about how they're thinking about that DeepSeek shockwave that really rattled every part of markets.
Absolutely, especially because it came right after that Meta announcement on CapEx. But we should say Meta is really the leader in that leaderboard of the Mag 7, up 15% this year. Of the Mag 7, pretty weak performance so far. They're up less than 4%. Apple down almost 5%, but you even brought in beyond that. You have even worse performance this year. Broadcom, Dell, Super Micro has been always volatile. Advanced Micro Devices, kind of everywhere you look, there's a lot of pain.
Yeah.
Anyways, we're going to go switch now because investors are awaiting clues from future moves from Fed Chair Jay Powell's news conference this afternoon. Busy afternoon, tech earnings and the Fed. We're going to bring you a preview now. Michael McKee, Bloomberg's chief international economics and policy correspondent, joining us from Washington. Missed you this morning. Looking forward to seeing what you see later today. What is the first question on your slate?
Well, The first question will probably be what everybody's first question is. What does this mean for March? Because if you're expecting some news today, you're probably going to be disappointed. We've seen the markets turn around on their views of what the Fed is going to do. Last December, when they said they were going to do 2 rate cuts, you can see the red lines there show that the markets priced in rate cuts starting as early as March. But right now, we're looking for not even 2 cuts this year. The yellow lines show that the markets think the Fed is on hold. Now, this changes all the time. If you're in the markets, you know that. And it's probably going to change a little bit again today. But there's no movement today expected from the Fed. And since there's still a lot of uncertainty about what Jay Powell is going to say and what the president is going to do, I don't think we're going to see the Fed go out on a limb. This is the balance sheet. If they go out on a limb in anything, guys, they might announce the end of QT or tell people when it might be coming because there's nothing else going on today and they haven't really talked about it. There's some feeling in the markets it's about time for them to do that. It's a possibility. We don't know that that's going to happen. It'll make a difference to people on bond trading desks, but it won't make a difference in what people think of in terms of the Fed cutting rates again.
Absolutely, yeah. A lot of bond traders would love some clarity there on the balance sheet plans. Mike McKee will be speaking to you throughout the day. That is Bloomberg's Michael McKee joining us from Washington. And let's broaden out this conversation now because sitting with us at the desk, I'm pleased to say we have Citi Global Head of Research, Lucy Baldwin. Lucy, great to see you in person.
Great, thanks for having me.
So we have these dueling catalysts this afternoon, right? And I'm curious for what matters more for you at this juncture, whether it's what we hear from the Fed starting at 2 p.m. or whether it's what we hear from the likes of Microsoft and Meta after the bell today.
Well, look, I think today the Fed is probably going to want to keep this as boring as possible, right, in many ways. I think, as your colleague Michael was saying, I think the expectation is that this is really going to be a quiet event. Yes, they might be asked lots of questions around what's happening in terms of inflation or whether the impact of the last few days in terms of DeepSeek and the impact of AI is going to have any implications for monetary policy. But I think relatively our view would be today is going to be a much quieter Fed. Now, that said, we are in the camp that you are still going to see rate cuts later in the year, and we do think the inflation picture does give the Fed scope to move probably at least 3 cuts from here this year, so more than the market is pricing in. Our US economics team actually think that over the next few months you will start to see more weakness come through in that labour market, so we've actually got slightly more cuts priced in. However, I don't think we're going to get a lot of news on that today, so I think what is far more important is going to be these earnings, and I think given everything that have happened in equity markets in the last few days, that's going to be critical, and particularly the narrative around capex spending and really the outlook for the Mag 7 to continue to deliver this beat and raise that we saw so much during last year, which of course delivered such a strong performance for that group of stocks and then the broader market.
You know, it's interesting. I wasn't here the last 2 days. I had serious FOMO because you saw what happened Monday. You saw the jump back in NVIDIA yesterday. We didn't recoup everything that was lost.
Still down about 9%.
Absolutely. And if you think about the future prospects here, what do you want to hear from those big tech names in terms of CapEx? And then what then is the ripple effect in terms of what you can see in the broader markets, given you do have that drag that Katie was talking about in the tech industry right now?
Yeah, and I think when you look at the context, right, we've come into this year after 2 years, back-to-back 20% plus returns, right, heavily driven by a very small concentrated group of names. And so we have been saying to people, like, diversify, don't leave yourself too exposed to that narrative. Now, the irony is we also have been saying that actually to investors, the health of that Mag 7 has looked fairly good, right, in terms of the outlook. You know, if you look at PEG ratios, they don't look particularly extended. And they were the group of stocks that continued to outperform and deliver last year, whereas actually the 493, you know, were the group that really delivered slightly less good earnings. And so I think everybody's going to be focused today on if there's any sense of pulling back in some of those capex plans, because to your point, we've seen so much, capex momentum building, and that was, of course, what was going to underpin and deliver that strong growth of earnings as we go forward. Now, for us, we feel if there is any sense that the Mag 7 aren't able to maintain that beat and raise dynamic with that higher base of expectations this year, that is going to add fuel to the fire around this broadening out thesis in not just just the US equity market, but also people looking for cyclical diversifiers to perhaps pair with their US long positions elsewhere in the world. And that could be Europe, it could maybe even be China in some situations, particularly, of course, given the excitement around the China news.
Well, I want to continue the point that you're making on big tech, because for a lot of people, big tech had turned into their haven play. They, of course, were getting the share price performance in spades, but also it was seen as this quality haven sort of asset, this macro agnostic sort of sector here. That seems to have hit a speed bump, that narrative. And something that's interesting this week is just the bid that we've seen into bonds. And where we're standing right now, how are you thinking about the bond market? And it seems to have returned a little bit to being a safety trade.
Yeah, it's a good point, because as you say, for a long period of time, 60-40 wasn't working, and then we got sort of back end of last year, we started to see, obviously, huge bond market volatility, but we've started to see that diversification nature of the bond market come back to the fore, and more people obviously being aware that high quality fixed income investments can be that great portfolio diversifier. And from our perspective, although we're very much still overweight equities, we are this year much more aware that you need to have that allocation to fixed income markets as well in your portfolio, as well as other diversifiers, things like safe haven currencies, which we'd still say is probably the dollar, and also things like gold.
So want to talk a little bit more about what we're seeing in the equity market versus fixed income markets. This chart that we're looking at right here was shared this morning by Torsten Slok over at Apollo, and you can see that even with what we saw this week in terms of the Nvidia sell-off, the broader tech sell-off because of it, you do still see the top 10 companies, of course the Magnificent 7 leading the way there, still almost 40% of the market cap here of the S&P 500. How much of a problem is that to you?
Well, I think it's in and of itself isn't a huge problem as long as the fundamentals of those stocks continues to deliver, right? And I think, when we look at it, we talked about this expectation of 20% growth for that group of stocks this year. In contrast, the other 493 have got sort of 10 to 12% worth of growth priced in this year. But of course, they haven't had a history of outperforming. And so they really do need to come through and deliver, right? And so when we think about our target for the S&P this year, we've got a 6,500 base case, we've got a 6,900 bull case, but we have a 5,100 bear case. So there is asymmetric downside risk to the way we're looking at wealth.
Yeah, broad range there.
It's a pretty broad range, but ultimately to get to 6,900, you really need to see, upgrades around all of those numbers, the 493 and the Magnificent 7. But I think, within that group, we do see a very strong fundamental setup for all of those names still. And we don't think that the news that we've seen with DeepSeek really changes that. We think, if anything, it's going to broaden out the AI trade, broaden out the excitement and the growth potential for some stocks away from the very classic AI names, the infrastructure names, the hyperscalers and the power names, which, clearly we're now starting to question whether some of those areas were a little overextended and are at risk of seeing some slowing momentum nearer term.
Maybe we'll get some answers to those questions tonight when we hear from some of these CEOs. Lucy, it's great to see you. That, of course, is Lucy Baldwin of Citi. And as we've been discussing, a huge day for earnings today with more than $7 trillion worth of companies from the Magnificent 7 reporting. Here with more is Jess Menton.
Happy Fed Day, guys. And of course, as you were just mentioning, Katie, we still have big tech stocks coming after the bell with those results, Meta and Microsoft leading the way here. And it's important because Meta stock actually up about 15% year to date, performing the best out of the Mag 7 cohort. But if you look over at Microsoft, some of those concerns about whether or not it overly spent on that type of AI demand up about 6% year to date. So that's going to be important because right now Citi's estimating that options traders are betting the swing that we're going to see tomorrow on the back of those earnings after the bell today is about 0.8% swing for the S&P 500 in either direction tomorrow. That's going to be key. Another stock I'm keeping a close eye on that is also reporting after the bell today is Tesla. So if you look at the implied move, one-day move after it reports its earnings, it's about over 7% swing. If you look over the last 8 quarters, it's much higher than that because in that span over the last 2 years, the average one-day implied move has been around 4.5%. Of course, the bar is high because that stock has doubled in value since its last earnings report. Of course, we know it is an EV maker, but it's trying to transition to AI. So especially what the company is saying when it comes to those self-driving vehicles, even though we know the Trump administration is lessening some of that demand for some of those tax break for EV makers, and especially people that are trying to get some of those tax credits. Of course, this company is trying to move in another direction with AI. And then lastly, have to mention ASML and what we saw with its stock performance in Amsterdam, rising as much as 12%. So that is its best day since 2020. The U.S. listed shares are also moving higher today. So you saw the bookings actually more than twice as much as analysts were expecting. And also, if you're looking over at where NVIDIA is trading in pre-market, it is lower, but of course it bounced back yesterday, was up about 9% after we saw it lose nearly $600 billion in value on Monday. So actually added close to about 260 yesterday. So not as much as we still need to see a bigger bounce back for NVIDIA. But of course, that's going to be something key when you think about Meta and Microsoft, also big spenders when it comes to those customers for NVIDIA, guys.
Jess, thank you so much. Looking forward to your coverage of what happens later today. Of course, a lot setting up for potentially messy trade. We'll see how it goes. Now, coming up, strong subscriber growth powers T-Mobile's fourth quarter as it makes plans to bring Starlink to Apple phones. That's really a big story. We're going to take a look at the wireless giant next. Shares up. Stick with us. This is Bloomberg. And now to high interest, a look at what's making headlines around the world. U.S. AI firms are staying alert amid DeepSeek's debut of its latest model. Microsoft and OpenAI are said to be investigating whether DeepSeek obtained unauthorized data output from OpenAI's technology to train the new R1 model. Bloomberg sources reveal that security researchers from Microsoft observed a large transfer of data in fall by individuals they believe may be linked to the Chinese AI lab. And Henry Schein shares are rising on the news that KKR has taken a 12% stake in the medical supplier. The private equity giant will become the firm's largest non-index fund shareholder and plans to work with the company to improve operations. 2 KKR representatives will join the board and a new independent director will be appointed. And LVMH shares sliding. The luxury house's fashion and leather goods sales declined 1% in its fourth quarter, casting some doubts in a quick recovery in luxury. Despite declines, though, Tiffany's sales were up and Louis Vuitton had a strong start this year with double-digit growth. CEO Bernard Arnault said he predicts a booming U.S. market. Katie, I would like to be buying one of those Stella McCartney bags, but they say that might be a business that they might be exiting from. Let's see that.
Yeah, we'll have to keep an eye on that one. A lot of interesting news out of the luxury space recently, but let's switch gears here because we have to talk about T-Mobile stock right now, really charging higher in the pre-market, currently up about almost 8% because not only did the company report strong subscriber growth this morning, but Bloomberg also reporting that it's working with Apple and SpaceX to add support for the Starlink network. Joining us now with more is John Butler of Bloomberg Intelligence. And let's start with, of course, the beat when it comes to monthly phone customers. They added over 900,000 in the prior period. The expectation on Wall Street had been for about 865,000. Where are these new customers coming from? Where are we seeing that growth being fueled?
So thanks for having me, Katie, and great question. So I think one of the areas where T-Mobile's doing very well is they're tapping into smaller markets. When you think about the brand, their initial splash was all in these top 100 markets in the US. They tend to under-index or have a lower share in markets outside the top 100. So that's a big source for them. They're also moving very heavily into the business mobility market, and they're executing well there. So I think those two areas have been a big source of growth for them. And of course, they have a very strong brand in wireless. It's really resonating well. So I think as people get shaken, leave other brands and you get share just from switching activity, I think T-Mobile does a very good job of picking up people in an environment like that.
You know, aside from earnings, of course, there is this Apple Starlink news that involves T-Mobile as well. This optionality here to be more connected to Starlink. Of course, a lot of people have a lot of fascination about how far this will go. What role does T-Mobile play in the story?
So CEO Mike Sievert, I think, put it perfectly. He said, there's a certain degree of, I forget the word he used, but he alluded to allure and having connectivity everywhere. And I think all the carriers are looking at satellite as a potential add-on service and a great excuse to raise prices. While at the same time, for consumers, it really does give you connectivity in areas where you just otherwise wouldn't get bars. I think the rollout for T-Mobile and others is going to be what I'll call a staged rollout, where initially you'll have the ability to text and maybe make 911 calls, but ultimately I see satellite being able to provide voice and probably low-speed broadband services, again, in areas where you otherwise wouldn't get coverage.
All right, John, really appreciate your perspective here. That is John Butler of Bloomberg Intelligence. T-Mobile shares up nearly 8% pre-market, and this is one of the outperformers. Shares up about 37% over the past year or so. And later today, the CEO of T-Mobile will join Bloomberg Technology at 11 a.m. Eastern. But coming up on this show, more on earnings with Nasdaq Chair and CEO Adena Friedman. She joins us next hour. This is Bloomberg. Welcome back to Open Interest. A quick check on futures as we count down to that opening bell. You can see still nursing losses on the S&P 500, currently lower by about 0.1%. We went a long way towards reversing some of the losses we saw on Monday in the aftermath of that DeepSeek news, but still the S&P 500 lower by about 0.5% to 0.6% on the week. The Nasdaq 100 much deeper hole there for the big tech index, trying to work its way out of that right now, currently higher by about 0.2%. We have a lot of catalysts in the form of earnings coming up after the bell for big tech, so keep an eye on that one. And the small caps currently lower by about 0.1% on the Russell 2000. I do want to bring you some headlines that we're getting from Mexico's Claudia Sheinbaum. She's saying that if U.S. tariffs are added, we have a plan, but also saying that we don't believe the U.S. will add tariffs on February 1st. And February 1st is on Saturday, Sonali, so we are getting closer and closer here.
Close to the line. In addition to Mexico, we're watching Canada closely as well because, of course, they have a press conference for the central bank around 10:30. A lot of people will be keeping an eye on for any tariff conversation that might happen and how the country might respond, of course, to what that might look like to them.
Yeah, a lot of international news to keep an eye on here, but we'll stick in the U.S. next because we are less than 4 minutes until the opening bell. Nancy Tengler joins us. This is Bloomberg. All right, we are moments away from the start of trading on this Fed day, on this earnings day, on this hump day. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. As I said a couple minutes ago, really in wait and see mode right now. Of course, we get the decision from the Fed at 2 p.m. Then the trade reverses when we hear from Chairman Jerome Powell at 2:30 p.m. And then everything changes again when we hear from the likes of Meta and Microsoft and Tesla after the bell today. But you take a look at where we are right now at 9:30. We have the bells ringing. People are clapping at the exchanges, and we are waiting for trading to really kick off here. We had a big rebound yesterday. Now the question is, can we sustain that momentum heading into the catalyst that we'll see this afternoon? Taking a look at where we stand about 20 seconds into the session, looks like the answer is no. If you take a look at the S&P 500, currently lower by about 0.1%. You take a look at the Nasdaq 100. An optimist would say we're a little bit higher. Someone maybe a little bit more clear-eyed would say that's pretty much unchanged. And it's a similar story if you take a look at the small caps, the Russell 2000. Small moves overall as we sort of recover from what we've already gotten in the first 2 to 3 days of this week. But let's take a look under the hood now because we have some stocks to keep an eye on. And one of them is T-Mobile. Reported earnings this morning and said that it added more customers in the fourth quarter than expected and that its forecast for net customers also beat the average analyst estimate. CEO Mike Sievert joins Bloomberg Technology today at 11 a.m. He's probably having a great day because his stock is currently up about 7.5%, Sonali.
You know, the life of a TMT banker these days. It looks pretty good over there. Anyways, also in the world of technology, ASML up about 5%, rising the most in 5 years. The AI boom is fueling demand for its chip-making machines. We were thinking a lot about chips this week. We're going to expect to hear more about CapEx from the big AI names tonight, and those names include Meta, Microsoft, and Tesla. And the focus, of course, is on that CapEx spending. After Chinese competitors in the AI space suggest not as much money is needed to create the top-of-the-line AI models. You see a wait-and-see trade in Meta, roughly 0.2% lower. Microsoft down 0.6%. As it looks into what happened with DeepSeek, of course, Tesla down almost 1%, fluctuating 0.6% now. Interesting to see a little bit of negative attitudes before these report, Katie.
Yeah, everyone a little bit nervous, of course, as we try to understand what DeepSeek represents, not just, of course, their specific AI models, but what's to come when it comes to the AI build-out and all of those spending plans. Let's discuss earnings and everything else with Laffer at Tengler CEO and CIO Nancy Tengler. And I am delighted that you're joining us at the desk today.
It's so much fun to be with you both. I feel like we coordinated.
Absolutely. Yeah. In the group chat there. I want to talk, of course, what we learned at the beginning of the week with DeepSeek, because you take a look at the weekly charts, absolutely leaving a dent right now. NVIDIA shares still down almost 12% for the week. That's one of the names that I know that you've been excited about over the past several years. Is this a dip worth buying?
Yeah, we did. I think yes, but you have to be disciplined and you have to be deliberate. I think, Katie, that's really the key point. And it also, I imagine, depends on when you got in.
Yeah.
So that's important as well. But we're long-term investors, and if you looked at the trading action, that was all the algos. Then the hedge funds join in. That's traders. It's not investors. And so for those of us who are investing for the next 3 to 5 years, we use volatility as our friend. And as long as the fundamental, nobody was talking about the underlying fundamentals. They were just talking about DeepSeek and the $5.6 million alleged investment that they made in order to develop their model. So I think you have to have common sense and you have to have the ability to dig into the numbers. And that's what we do. We have analysts that do that.
I want to go back to last week, which feels like a year or two ago now, because Facebook, Meta, had said that they would be spending a lot more than what was expected in CapEx.
Up to $65 billion.
Totally. And if you think about that, do you think that the others will still follow, or do you think that the DeepSeek noise right now is going to really overshadow some of those projections?
I don't think so, Sonali. I mean, we also had Project Stargate announced, and so that was one of the things that made me think this announcement was somewhat suspect, the timing of it, if you will, because Silicon Valley's known about DeepSeek for months and had war rooms set up, and we're already analyzing the model. So this was, I think, meant to be a shot across the bow that said, hey, we're competitors in this space. Don't underestimate us. And that's and a little bit of fabrication or hyperbole, potentially, as I would have said to my kids.
Yeah, there's plenty of skepticism around some of those numbers that's percolating its way across Wall Street right now. I am curious, though, about the rest of the AI supply chain, because it's not just necessarily in the big tech giants that you've seen this drawdown. It's also in utilities, in energy stocks that had been real beneficiaries of this boom and all the power demand that was going to and is expected to come from AI demand. Do you think that that's still an investable narrative, or did that get a little bit over its skis?
Well, I think some of those stocks ran way too fast on just a hope and a dream. But there are places where we'll be adding, or we have already added. I would also point out that the software names where we were shifting to in the last 6 months did really well on Monday. Was that just Monday? They did really well and are holding up well. Many of them are going to report today. ServiceNow, which is one of our 12 best ideas. Microsoft, another 12 best idea. So I think that's one aspect of the trade that you can still, with confidence, invest in, because the application side. And then in terms of the utilities and the need for power, our power grid's old. And we are onshoring. That is an objective of this administration, to onshore manufacturing. So I think demand is going to continue to rise for a name like Quanta Services, and that's one of the ones that we own and will continue to add.
So another name that is in the Mag 7, but a little different flavor here. You're looking at Tesla. When we talked to you after the election, after that big run-up, you said you were taking some chips off the table there.
Yeah.
Wondering how you feel about it now, because in the Elon Musk universe, yes, this has been a stock that's been bid up, but he's got a lot of other things going on with Starlink. He's selling X debt now, of course, via Morgan Stanley. He's looking at a new apartment in West Palm Beach. I mean, how much love do you have for Tesla to begin this year?
We still like it, and on weakness, historically that's what we've done. We've added on we've kept a core position, we've added on weakness, and then we've trimmed on strength. But you know, the Model Y announcement in China was pretty compelling in terms of units sold. The FSD progress, you know, Elon tweeted, it's my favorite entertainment when I get up first thing in the morning to look at his tweets. But he tweeted that they were, you know, FSD was taking the cars to the dock. So you saw this slow, you know, transport or slow parade of the cars driving themselves to the docks. So I think that will fast track. We've always been big fans of the Megapack business, which is, you know, high grade electric utility storage. So I think that will continue to grow. It grew 52% last quarter. We expect to see a good number. It's tomorrow, today.
No,
Tesla?
today.
Tesla's today.
Today. It's aftermarket.
'Cause it's Wednesday.
Right, what day is it? Nobody knows anymore.
Reportedly, it's around Wednesday.
Two days into DeepSeek.
You call
Got
it. You call it excitement. I call it anxiety. I do have alerts for his tweets, and you never know where it's going to send it going, right?
He tweets with such frequency, it's really hard to
I
keep
know.
up with. And it's not just the actual tweets, it's the replies to other people's tweets
right,
as well.
right.
But I mean, we could spend another hour on Elon Musk. But I do want to talk about the Fed. It seems like everyone is eager to forget that we have a Fed meeting this afternoon. And to be fair, it's expected to be pretty boring. But I'm wondering how an investor such as yourself views the Fed and the impact of monetary policy, because you run pretty concentrated portfolios. Your high conviction ideas really span industries here. How do you layer on monetary policy influence on top of that?
So we've been, as you know, super critical of the Fed. I think they've made mistake upon mistake, and the 100 basis points cuts that we saw by the end of last year just resulted in a 100 basis point rise in the 10-year. So our head of fixed income is quite concerned that the Fed is going to make a mistake and be unconstructive for the bond market. So they, you know, I think Chairman Powell emphasized tariffs, and so far we haven't, you know, and that was influencing policy. And so far we haven't seen that. So I think we're going to be listening for what he says about monetary policy. I'm sorry, fiscal policy, what he says about the environment. And but in fact, what the Fed should be doing is really looking forward and trying to estimate how fast this economy is going to grow. And we think that the neutral rate can be much higher because of productivity enhancements coming from generative AI, among other things. So I've kind of stopped listening. I'm sorry to say. He will impact the market in one way or another, but I don't think it'll be sustainable.
Nancy, we have to leave it there. Thank you so much for joining us on set today. That is Nancy Tengler, of course, of Laffer Tengler, in the middle of a very big earnings moment for the market. Now, coming up, it's a big day, as we've been talking about, for tech. Microsoft Meta earnings on deck. We're going to discuss the details with Brent Thill of Jefferies. Stick with us. This is Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, UBS raising its price target on Starbucks after the company posted better than expected first quarter results. The analyst maintaining a neutral rating, however, saying that the coffee chain faces considerable pressure in 2Q from restructuring changes, but a lot of enthusiasm in the stock right now, currently higher by about 5%. Next up, Datadog cut to a hold over at Stifel. The analyst is anticipating revenue growth and margin headwinds over the course of the year. And finally, we have Piper Sandler noting a new Reddit feature that allows marketers to import an ad campaign over from Meta. The analyst writing that it could help bring more advertisers to the platform, and he has an overweight rating on the stock with an $197 price target. Sonali.
And Microsoft, Meta, and Tesla, worth a combined $7 trillion, are reporting after the bell. Capital spending for their AI efforts are in focus as Chinese competitors throw a wrench in the amount of money and energy needed to power the revolutionary technology. We're going to discuss this with Jefferies analyst Brent Thill. He has a buy rating on Microsoft and Meta. And Brent, one thing we've been discussing, of course, is if we did not have that DeepSeek scare in the CapEx world on Monday, the story would have been different. How much noise will there be as these companies look to start answering that CapEx story, justifying really the spend they're making.
Yeah, there's a lot of noise right now in terms of what is real and not. And I think ultimately, no one is questioning the DeepSeek technology. What everyone is questioning is the cost to effectively achieve their goal. And most have said that this is not true. This couldn't be true. You can't do this with $5 million. You look at the incremental CapEx raise just on Friday that Meta put out, now spending, CapEx will be up 60%. Microsoft's CapEx will be north of 80 billion this year. You look at the rest of the industry. If all these U.S. tech companies were that efficient, shouldn't CapEx start to slow? And everyone's ramping CapEx still. So I think again, there's a lot of questions. Probably the most important question right now is AI seeing a moment of inflection in terms of training costs, and what does that mean for the industry? We don't believe, again, we're too early in this journey. In our belief, to see the magnitude of changes that DeepSeek is claiming. And so we don't believe that the rest of tech is going to suddenly say, hey, AI costs are falling out of the sky. We don't think we're going to see that. I think it's going to become more efficient. I think the bigger question is on AI adoption overall. Many enterprises are really slow in adoption, and that's going to be the bigger hurdle, not necessarily some of the costs at this point. So we don't believe that some of the claims are true. We certainly believe the technology is viable, and we expect both Microsoft CEO and Meta CEO tonight to address this. It's probably the number one question. It's probably even ahead of most questions about the financials, because it's having such a wave turbulence in the rest of the market. And so our belief again is that it's probably not as there's a bigger bite than bark right now from what DeepSeek is saying.
Well, Brent, I mean, you've addressed some of this, but I am curious whether we risk a sort of head in the sand moment here, because, okay, maybe it wasn't $6 million, as low as $6 million, but consensus seems to be that this was developed much more cheaply than what we're seeing by American firms. And I hear what you're saying, that you don't expect AI costs to fall out of the sky here. But, I mean, when it comes to the likes of Meta and Microsoft and how they're spending that money, I know you have a buy rating, but do you think that we should be rethinking some of these priorities here?
I don't, because we're at the beginning of this tectonic shift. And again, Microsoft has said this so many times to this question: do you want us to get 5% market share or 50? You choose. As an investor, I want 50. I don't want 5. And we're at the beginning of the shift. So again, I think what you're dealing with are very responsible companies that have shown ROIs. If you look at Microsoft's backlog relative to their CapEx growth, they're seeing great incremental backlog growth, and they're showing a reacceleration in their Azure business. They're showing this value where you're starting to see CIO surveys where CIOs are like, I've deployed these co-pilots to 5-10% of the workforce, but I'm going to 90% in the next 3 years because I want to make them more efficient. So I just don't think that this is the right time to pull back the throttle when you're in takeoff. I mean, no pilot would ever do that.
Well,
it doesn't make sense. Right. So I don't think that we're overspending right now. We have to. The bigger question really is, are these technologies going to prove out to the magnitude of what the hype is? Right. And I think that's the bigger risk.
Brent, I mean, speaking of hype, right? I mean, these are still companies that make up so much of the S&P 500 market cap. You're having a lot of investors here worried about concentration risk and valuation too. So in your coverage universe, what actually still has the most room for upside?
Well, software in general will benefit from this trend if we become more efficient. We've said this. The software industry has underperformed massively relative to AI infrastructure. So if you look NVIDIA, VST, VRT, all the AI infrastructure names, we've said this repeatedly, there's going to be a shift. And we're seeing that in the last 2 days where money's flowing out of the AI infrastructure into the software layer. CEOs like Mark Benioff at Salesforce, all the way through all the execs that we know are saying, look, this is great. It democratizes AI, it'll make it more efficient. This is if this is true, this is a very good trend for the software industry. So we like Microsoft, Salesforce, Snowflake, and again, for enterprise AI, both Microsoft and Amazon. For consumer AI, Google and Meta. these companies are in really good spots because they're going to be able to effectively monetize AI at a much higher rate if this is true.
Right.
Again, I do not believe it's true.
All right, Brent, we got to leave it there. Great to get some time with you ahead of a big earnings day. That is Jefferies analyst Brent Thill. Now, we do want to talk about some breaking news coming out of Canada, specifically the Bank of Canada, cutting its policy rate by 25 basis points to 3%. That had been the estimate here. This bank has eased about 200 basis points since June. The press conference comes at 10:30 a.m. That's where it could get interesting. Of course, a lot of focus on tariffs with that levy expected to come into place on Saturday as it stands right now. Now, coming up, Howard Lutnick, he is President Trump's nominee for Commerce Secretary, set to testify at his confirmation hearing. We'll take a look at his priorities in our Wall Street beat coming up next. This is Bloomberg.
President Trump making sweeping changes to the U.S. government at a pace that is causing confusion among agencies and organizations nationwide. Trump signed an executive order freezing trillions of dollars in federal grants and loans, later saying it does not apply to individuals who get government assistance. A federal judge temporarily blocked the order last night. And separately, the White House offered roughly 2 million federal workers the option to resign, but to be paid through the end of September. That brings us to the Wall Street beat, because also happening at the top of the next hour, we're going to be monitoring the confirmation hearing of Howard Lutnick for Commerce Secretary, Bloomberg's chief Wall Street correspondent, although that's kind of the same right now.
Another promotion.
Right. Sridhar Natarajan joins us now to discuss the priorities if confirmed. Gina Raimondo took the Commerce Post and made it much bigger under the Biden administration. Howard Lutnick, of course, was very close to the president during the campaign. What are you expecting in terms of the hearing itself? We already know a few things, like the 800 entities he's associated with in the ethics filings that he needs to separate from. But what are his plans?
Look, yes, you're right. Under Gina Raimondo, the Commerce Department did become a very important function inside the Biden administration. But you can be guaranteed that in the Trump administration, a trade and tariffs-focused administration, the role held by the Commerce Secretary and therefore the role that's likely going to be held by Howard Lutnick will be extremely important. Trump has already tasked the Treasury, Commerce, the USTR to work together to study the various trade policies that the U.S. government has with various blocs of nations across the world, because this is one area where you will continuously see a flow of news over the next several months and possibly through the course of this administration. So Howard Lutnick's role there will be extremely important. To me, what will be interesting is Commerce and Treasury will have to work in close concert with each other. And we know that post-election, there was so much reporting about the friction between Scott Bessent, the Treasury nominee now confirmed to be Treasury Secretary, and Howard Lutnick. So can the two of them set aside their differences and work together? Or will we see some jolts and turbulence and obstacles down the road, which might lead to some personnel changes, which is it's not something you can rule out in a Trump administration.
Yeah.
But for now, Lutnick's making all the noises that the business community will like.
Yeah, of course, they were jockeying for the same job, so maybe that got a little bit awkward there. Let's talk about some potential issues here. I mean, as relative to the rest of the Trump nominees, Lutnick is expected to have a pretty easy confirmation, but you take a look at some potential conflicts. We know that Elizabeth Warren has been pressing him on his relationship to Tether, for example. What are we expecting there?
Look, there's no doubt that when you look at the Democrats, their rallying cry is going to be that this is a government by the rich, of the rich, for the rich. Trump has obviously surrounded himself with ultra-wealthy financiers, but at the same time, the Republicans will say these are people who've had success in the business world, and therefore they can be trusted with these roles to drive forward a very growth-focused agenda.
Well, speaking of, and we have less than a minute here, too, you reported yesterday that Steven Feinberg of Cerberus is looking to Goldman Sachs to potentially offload his stake in the company. You have John Phelan of MSD, formerly of MSD, joining as Secretary of the Navy. What does it mean for Wall Street to have so many of their closest contacts in offices?
At the very least, they can take comfort that unlike the Biden administration, this is not going to be a government that will bring out the pitchforks against Wall Street.
All right, Sridhar, always great to see you. That is Bloomberg's Sridhar Natarajan. And coming up in the next hour, we have plenty of CEOs to speak to. Nasdaq CEO Adena Friedman joins us, followed by Otis CEO Judy Marks, both reporting earnings. Looking forward to those conversations. This is Bloomberg. right, we are 30 minutes into the trading day on the first Fed day of 2025. Welcome to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Sonali Basak. Matt Miller is off today. And coming up, the first Fed decision of 2025. A pause is expected as Chair Powell gears up for a presser with politics on the agenda. And defending America's tech dominance, Microsoft, Meta, Tesla kick off the Mag 7 earnings parade just days after DeepSeek rattled Silicon Valley, Wall Street, and Washington. Plus, other earnings also flooding in. This hour, we're going to get the view from the C-suite with Nasdaq CEO Adena Friedman and Otis CEO Judy Marks.
All that and more coming up. Let's get a check on these markets. Volume a little bit lower right now, as you might expect. Of course, we're awaiting the Fed. We're awaiting those earnings, and we are awaiting some catalysts because right now the S&P 500 taking a leg lower, but small moves overall. The S&P 500 down about 0.2%. The Nasdaq 100 a little bit more on your big tech names, down about 0.3%. The bond market behaving for right now. We know a lot of this is going to change at 2 p.m. Eastern today, but at least for right now, the 10-year Treasury yield 2 basis points lower if you round, currently camped out just above 4.5%. Let's break down what to expect from the Fed this afternoon with Michael Darda. He is Roth MKM Chief Economist and Macro Strategist. Great to have you with us, Michael. And I want to start with whether we're expecting a skip or a pause from the Federal Reserve today. I know that sounds like I'm torturing the English language here, but I'm wondering if we're going to have to possibly wait until May or later to see the next rate cut.
Thanks for having me on. Great question. Yeah, I think the Fed is probably going to be pretty comfortable with where market pricing is right now because it aligns perfectly with the dot plot. The dot plot basically guides for 2 rate reductions this year, back-end loaded, and that's essentially where market pricing is. So we're on a multi-month pause, as we've been phrasing it, as the Federal Reserve takes in more information about the business cycle and about the fiscal policy and regulatory dynamics that could potentially change as this year unfolds.
This year unfolding, one question I have is, Katie and I were kind of debating this earlier. I didn't get your prediction, though. Does the 10-year, what happens? I mean,
As
can
a
I press you
journalist,
again?
I have no opinions of my own.
I guess I didn't state mine either. But Michael, what's yours? You look at the 10-year yield. Do you think that after today, is there a real opportunity here that it could break back below 4.5%? Or is there still more risk to the upside, given that the control the Fed really has is over the short end only, mostly?
Yeah, absolutely. Only complete control over the short end of the curve. And the business cycle is going to largely influence long-term interest rates. And obviously, Fed policy expectations are going to move with the business cycle. So, there's some interconnections there, of course. Our view is that the 10-year yield can potentially move down to about the 4% level. And we were making that argument as the yield went to almost 480 mid-January. So we've pulled back now 25, 30 basis points from the peak levels seen earlier this month. So this is more of a trade, I think, than a long-term investment. There's a tremendous amount of bearishness on the bond market that's out there. We think it's a bit overdone. There's also a tremendous amount of fear and loathing about inflation, which we also think is overdone. And if you look at the level of economic surprises, they correlate very closely with the level of the 10-year yield. The economic surprise index isn't looking so hot lately. It started to recover from last fall. It's recently softened a bit. So that relationship at least tells us that there's probably some room here to go in terms of the bond market rallying at the long end and the 10-year yield continuing to pull back.
I agree. The fear and loathing you've seen in the bond market to start 2025 has been pretty remarkable. But just in the past few days, at least according to JP Morgan, you've seen some of those long positions get built back in. But I want to build on this conversation about the short end, because it was really interesting to me to see the 2-year Treasury yield drop 7 basis points on Monday, of course, when we got that DeepSeek headline and all the panic that ensued there. Are you able to draw a line between, of course, what we're seeing in the AI build-out, spending, existential questions, what's going on over here, draw a line from that into Fed policy, or does it not exist?
Oh, no, I think there's definitely a connection. I mean, the AI build-out and the frenzy that has been taking shape over the last 2 years in AI-related and technology stocks certainly has gone a long way to easing financial conditions, and that's something that the Fed cares about. So, if this huge boom in the equity market starts to flicker a bit, naturally, that should feed into long positions in the bond market, especially if there are some fears that maybe this upswing in productivity growth that we've been enjoying over the last couple of years is starting to fade a bit. And we also have potential policy cross currents coming at us. The Federal Reserve's trying to figure out what the tariff outlook is going to look like, what the labor force impact from deportations will look like. And so a lot of cross currents and rising uncertainty levels. And I think that would certainly play into more volatility. And obviously, we have incredibly high valuations in the S&P 500, driven by 7 stocks and 2 sectors that now make up 40% of the market cap of the S&P 500. So we're not going to have to see much in the way of potential disappointments for a fairly material drag on the overall indices, and so I think that's how these variables do interconnect.
Speaking of fear and loathing, one thing that I'm watching really closely is this concentration risk in markets. You're hearing investors talk more and more about it. But the problem is whether you want to blame the bots or whether you want to blame the pod shops, you do have this issue where when you see a sell-off, it could be somewhat violent. How do you fight that? Do you buy those dips, or do you worry that some of those moves can pull you under?
Yeah, I think there's going to be a tendency to try to buy the dip here, no doubt. We certainly saw that yesterday, and that's because investors have been rewarded handsomely for buying any pullback over the course of the last 24 plus months. And so, that is sort of going to be the rote response until it's not, right? We'll see an effort to buy the dip. And then if the market continues to roll over, I think that could start to lead to a bit of panic, considering how high equity market valuations are. And listen, this is not an effort to throw a wet blanket on the AI revolution. If we look back at history, periods of transformational change tend to be associated with what look like bubbles, right? We saw that with the internet revolution in the late 90s, and equity market valuations went into the stratosphere, and ultimately that led to a nearly 3-year bear market with the S&P 500 falling 49%. What I'm a little nervous about here, and you can see it in some of the quotes, some of the major financial news organizations that have been writing stories about the equity market in retail investors, some of which are in their 70s or even higher, that have an insane concentration in their own portfolios. And their view is you buy every dip, you stay in the market, and you basically move everything into equities, full tilt, risk ahead. And I'm afraid that will end up in tears sooner rather than later.
Well, that's the thing. If you buy the S&P 500, 10 companies make up 40% of that index. So you're already concentrated there. A lot of existential questions, Michael. It's great to unpack some of them with you as we head into that Fed meeting at 2 p.m. Our thanks to Michael Darda of Roth MKM Partners. Meanwhile, stick with Bloomberg for full coverage of that Fed decision. Our surveillance special begins at 1:30 p.m. New York time. Now coming up, the Nasdaq beating EPS earnings in the fourth quarter. Adena Friedman, she is Nasdaq chair and CEO. She joins us next for more on the future of the exchange. And happening right now, also keeping an eye on Washington, D.C., because Robert F. Kennedy Jr., he is Trump's nominee to run the Department of Health and Human Services, testifying before the Senate Finance Committee for his confirmation hearing. You can watch both hearings, of course, RFK Jr. and Howard Lutnick, by typing TLiveGo. This is Bloomberg.
Impossible to know where he stands on so many of the basic issues that impact Americans' daily lives. In a gobsmacking statement of irresponsibility.
Now, investors across the globe are waiting for an IPO comeback. Nasdaq has one of the most intimate views of what that market could look like, and joining us now on the heels of Nasdaq's full-year results that beat analyst estimates, Adena Friedman, Nasdaq chair and CEO. Everyone's waiting. Everyone's waiting. We haven't seen a full rush back to market yet for initial public offerings. What are you seeing under the surface? How soon can we get there?
Well, I think as we exited 2024, we saw that investors are feeling more confident in having more, I would say, some level of predictability in terms of interest rates and inflation, the growth. It's been resilient. We're starting to see some normalization in elements of the economy that allow investors to feel more confident in putting capital to work. So coming into 2025, we have been expecting the fact that the IPO environment will likely heat up as we go into Q2 and into later in the year, because you have to get through a big change in the administration and other changes that are happening at the beginning of the year. But we are talking with a great number of companies that are excited to come and tap the public markets. They're putting at least tentative dates on the calendar and getting very prepared for it.
Is it a flood or is it a trickle?
It's hard to know. Honestly, it really depends on a lot of factors. I can only say that we have a healthy pipeline of really interesting companies that are ready to come out this year. We've seen also both the VC investors and private equity investors really gearing up to bring companies out. And so it's just a matter of, are they going to see the reception that they're looking for? But investors are also ready to put risk capital to work. And, I think that, as you know, our company is broader than that today. But as we looked at the business and in the markets, we continue to see good trading volumes, an opportunity to have a better listing environment, great index performance, and then, of course, we have our technology division as well.
Speaking of index performance, 40 years of the Nasdaq 100. I know you were celebrating that. If we reflect on what we're seeing right now, of course, there's been a lot of change to that Nasdaq 100. Where do you see the Nasdaq 100 going in the next couple of years, given this rapid change in the technology environment that we're seeing?
Well, I think we should take a minute to step back and look at the Nasdaq 100 over that 40-year period. The first thing to note is that over a 40-year period, the Nasdaq 100 has delivered a 14+% CAGR growth, compounded annual growth over that 40 years. So what does that really represent? That really represents the fact that the Nasdaq 100 reflects the future of the economy, that it is kind of the index that is driving, that reflects where the economy is going, how technology is going to have an impact on the economy, and has delivered incredible growth and returns for shareholders in the index. I think going forward, we're going to continue to see technology as the driver of the economy. If anything, it's going to accelerate even faster. There are going to be new companies coming in. The large tech companies are continuing to make massive investments in the future infrastructure to support the future of the economy. And AI technology, we're just on the dawn of that. And I also believe that you'll see more and more companies benefiting from that in terms of efficiency and productivity across the entire economy. And that'll benefit all stocks, but also the fact that the technology ecosystem will continue to be the driver of the future.
As we sit here today and talk about technology, there was a lot of questions really burning in the market this week with the DeepSeek moment. This question about CapEx spending, what it means for many companies. How do you see that dilemma from your perch? A lot of people were throwing around the term Sputnik moment, but that was also seen as a hyperbole elsewhere. How do you feel about it?
Yeah, first of all, we are at the beginning of the dawn of a new technology, and I would even say potentially a technology revolution. And we have to reflect on the fact that there's going to be a lot of innovation that comes down in this space. Every new innovation is going to have the opportunity to benefit every industry. And that's the great thing about this technology is it's not industry specific. It's not even operation specific. It has the ability to infuse itself across companies to drive efficiency and productivity. So you have these new innovations that come out. I think competition is good. I would never underestimate the power of American innovation. I think that it means that we can have more options, more choices as we look at using this technology ourselves. Nasdaq is very deep in bringing this Gen AI technology into our product suite. We have our financial technology suite. By the way, overall, Nasdaq grew 9% in 2024, and our technology division grew 10% in 2024. We bring that technology in to drive and automate workflows for our clients, make them more efficient, make it so that we can root out criminal behavior more efficiently and effectively, make sure we can do regulatory reporting more efficiently, effectively. There's so many ways that we're using that technology in our fintech division. And then in our cap division, which have reliable access platforms, we're developing new index products, leveraging AI. We're also bringing that Gen AI capabilities into workflows for corporates and investors to make their lives more efficient. And we're just started. Like, this is like year one of what this technology is really capable of.
Well, it's interesting because as somebody who leverages this technology throughout many businesses, as you were talking about, wouldn't you want it to be cheaper?
Well, in general, what we should expect is that there's going to be a massive amount of innovation. Innovation generally makes things more efficient. Efficiency drives price down. There's already been a very large efficiency that's come into these models anyway. They're much cheaper today than they were a year ago. So I just think that that will continue to be the case. But also the use of it is going to broaden and expand dramatically. The more efficient and the more affordable, the use is going to go up a lot. So every model creator, they're going to have an opportunity to find a growing market here.
I'm glad you brought up American innovation, because another aspect of this is the concern that maybe investors aren't realizing the type of competition that Chinese AI models are presenting. How do you feel about that dynamic and view it from your seat?
I'll never underestimate the power of American innovation. And I think that, as we've always talked about, the economy is global, technology is global, and we have to operate and compete in a global economy. So it's very important that we all just support this innovation in a way that is going to drive the right results for companies, the right results for society. I'm very optimistic in the fact that we have so much focus, so much innovation, and so much investment going into the technology.
Another thing you've been talking about a lot this year is regulation and the power for changes in regulation to really bring more companies to market, among other things, save costs. How do you feel about the prospect for change this year? If the Trump administration, the new SEC, maybe even the new CFTC, if they could do one thing that would really move the needle, what would that be?
I don't have one thing on my agenda. I have several. So it's important for us to focus both on unlocking the potential of the financial industry in terms of making regulations smarter. Regulation is very important in the financial industry, but there are a lot of probably outdated regulations that could be reevaluated. There's a lot of regulation where maybe they had their original intent was to drive safety and security for investors, but the way they measure it is solely on inputs as opposed to outcomes. So how do we get more outcome-oriented regulation that allows technology to be brought in to help solve these problems as opposed to having to do it only with adding time and adding people to the processes. So there's a lot of opportunity to make the financial industry more efficient. If they could take 10 to 20% out of just risk and compliance programs, that's unlocking $25 to $50 billion of capital that could be deployed into the economy. So that's one. And then, of course, making the public company existence, I would say making that more efficient and effective as well.
Another area, too, I have to ask you, because a lot of people are looking at you and saying, okay, what does Nasdaq do in the world of digital assets? And this is something where I know you've spent a lot of time. With the rules changing around digital assets, does it change your thinking on how much you may want to embrace them?
Well, we are a technology provider to the cryptocurrency industry by providing trading, clearing, surveillance technology, now risk management technology to banks who hold digital wallets. We also have a financial crime capabilities to support both digital and fiat wallets. So as a technology provider, we're very engaged. As a market, we have the most successful crypto ETFs on Nasdaq, and we're very proud to support that ecosystem. As a market operator, we're going to have to look at how the regulatory environment shapes up, because it's really going to be there. I think the SEC and the CFTC will be introducing rules of the road, with gearing towards investor protection. And if that's the case, and we have very clear rules of the road, and we see an opportunity for us to be successful and to engage our clients in new ways, we will certainly consider that. But we already have a heavy engagement in the industry today.
Adena, we thank you so very much for joining us here on set today. That is Adena Friedman of Nasdaq, of course, on the heels of results. Now, happening right now, Robert F. Kennedy Jr., Trump's nominee to run the Department of Health and Human Services, is testifying before the Senate Finance Committee for his confirmation hearing. Also on Capitol Hill, Howard Lutnick, President Trump's nominee for Commerce Secretary, is set to testify at his confirmation hearing. You can watch both hearings on LiveGo or follow our live blogs on TLiveGo. This is Bloomberg.
Employees. Mr. Lutnick has also given back in incredible ways. For 5 years following the 9/11 attacks, he ensured the families of the
All right, it's time now for Social Climbers, the companies making waves this morning. And first up, Microsoft and OpenAI are said to be investigating whether DeepSeek obtained unauthorized data output from OpenAI's technology to train the new R1 model. Bloomberg sources reveal that security researchers from Microsoft observed a large transfer of data in the fall by individuals that they believe may be linked to the Chinese AI lab. Next up, it has never been more expensive to advertise at the Super Bowl. Prices for 30-second spots have risen to a record of over $8 million. Expect more ads this year featuring humor and nostalgia and fewer movie trailers. Remember, the Chiefs face the Phillies on February 9th. And finally, HBO and its parent company, Warner Brothers Discovery, in focus ahead of the latest season of White Lotus. The show doesn't just provide a boost for its producer. The first 2 seasons have turned the local Four Seasons hotels outposts in Hawaii and Sicily into pop culture icons. And Thailand, the setting of season 3, has seen a spike in holiday bookings. A little bit of a jumble there, but let's take a look at markets because that makes sense. The S&P 500 right now, again, in wait-and-see mode, as we've been talking about, down about 0.2%. The Nasdaq 100 off by about 0.3%. The bond market, as we've been talking about, pretty quiet this morning. Coming up, Otis's 2025 outlook coming in below estimates. The company's CEO, Judy Marks, joins us next. This is Bloomberg. Well, another stock we're keeping an eye on this morning is Otis Worldwide. The elevator giant beat on fourth quarter net sales, but as always, it was all about the forecast. And the 2025 EPS estimate were below forecast, and you can see that right now in the share price. Let's unpack it all with Judy Marks. She is Otis Worldwide Chair and CEO. Judy, it's great to have you with us, and I want to go right to China. I believe it was the first question on your earnings call as well, because you take a look at new equipment segment net sales. They fell 7.4% year over year. A lot of that came from that 20% decrease in China. So when it comes to the Chinese market, what are you thinking in terms of pricing there, the deflation that we've seen, and where it could go going forward?
Yeah, good morning. The China market has been structurally resetting itself. It's the largest elevator and escalator market in the world and has 40% of the install base of the world, which makes it a great service market as well. But on the new equipment side, it's down about 35% since 2021 when it peaked after 20 years of significant growth. So the good news is we're cost price neutral as we continue to compete in China. The market was down 15% new equipment last year. We're saying it's going to be down 10% in our outlook, which is giving us, obviously some challenges in new equipment next year. But our service business globally is more than making up to it in our 2025 outlook.
You talked in your earnings call today with Analysts this potential for stabilization in China, and you were talking about the rest of your outlook here. To the extent you're worried about anything that can kind of upset the apple cart here, of course, a lot of changes in the U.S. administration in terms of policies with partners across the globe. What is your biggest concern?
So we're local for local everywhere. It really serves us well. We've been in business 171 years. We've seen lots of geopolitics happen, but we are specifically a local company everywhere we do business. In China, we've been doing business for 40 years. And this morning, we announced that we are going through a structural transformation there to focus more on service, which, again, 40% of the world's market, and we've got about 5% share to date, as well as modernization and refurbishment of older elevators, which is a growing market globally. So we watch that. The other challenge we have in our outlook, where we outlooked about a 4 to 7% EPS increase between $4 and $4.10 for 2025, is FX. Obviously, being such a global multinational, 30% of our revenue happens in U.S. dollars. The rest is non-U.S. currency. So we share with our investors, we share very transparently how we've built our guide. And as things change through the year, we naturally hedge because of where we manufacture and where we service, including, we're a proud American manufacturer in our factory in Florence, South Carolina for our North American business.
Yeah, great reminder, too, on that strong dollar that you're dealing with and plenty of your peers are as well. And when it comes to the dollar, a lot of that comes to what's happening in the rate picture right now. Of course, we had a Federal Reserve decision expected this afternoon. Not too much movement expected on this specific day. But when you look forward, when it comes to the housing market, obviously it's been a little bit hosed up, and a lot of that comes back to higher rates, both when it comes to existing homes and new building construction as well. New building construction, obviously a big business for you when it comes to actually putting in these elevators. What's your outlook there?
So in North America, we saw a great second half of 2025 in new equipment orders, and in Latin America as well. But especially in North America, there are enough developers who are ready to go with a decision that when the first rate decrease happened, they converted our proposals into awards, and we'll be delivering that as part of our backlog in 25 and 26. A lot of green shoots. We're seeing it across all buildings. We have a ubiquitous product. We have a product that goes in any building, whether it's a condominium, an apartment, a surgical center, a hospital, a school. As long as you're over 3 stories, you need our product, and we're the world's leader. We service 2.4 million elevators every day. But on the new equipment side, we're very encouraged by what we've seen in North America. Our orders were up almost 15% in the fourth quarter after being up almost 18% in the third quarter. And we see the Americas segment being up next year. We also did really well in Europe, even with all the challenges. We're more partial, and we have a bigger install base in Southern Europe, and our business in Spain, in Italy, even in Greece has picked up significantly. New equipment, service, and modernization. So we think Europe will be up. We think Americas will be up in 25, and Asia Pacific ex-China continues to be a growth market for us, and we saw a great contribution this year from all 3 of those regions.
Judy, I'm also very interested right now in the labor force. You spoke a little bit about it to analysts, and I want to double down. To Katie's point, it's Fed Day. A lot of people are watching the labor market underneath the surface of this economy. What are you seeing? You described some challenges, but a willingness to invest. What's the calculus?
So we have 72,000 colleagues, and I have to thank them for their amazing contributions, their focus on our strategy and delivering for our customers. Again, 2.4 billion people a day touch our product. So when you're in the life safety business, our people are so important, our field installers and our field mechanics. 44,000 of our 72,000 colleagues globally are our field professionals. This is a profession, it's a craft skill, and we made a conscious decision to ensure that we would have the workforce of the future, regardless of retirements, regardless of attrition, and we added 5% to our workforce last year, many of them through apprenticeships, most of them through collective bargaining agreements across the globe. And couldn't be more proud of our workforce. A lot of the new ones are coming up to speed, learning curve. But we are going to be prepared to continue to grow our service business 6 to 7% next year, to continue to be there as the building industry revitalizes, especially towards the end of 25, even in China. And we're very optimistic. The only other market, though, that's growing faster than any of these is what we call modernization and refurbishment. 8 out of the 22 million elevators in the world are over 20 years old, need technology refreshes, need aesthetics refreshes. That's going to be our highest growth market going forward and fuel our service portfolio growth as well.
That's really interesting, and I'm glad you brought that up, because when it comes to, the maintenance, the modernization side of things, what rate should we be looking at? Should investors be anticipating when it comes to 2025? I mean, I'm taking a look at Bloomberg Intelligence's flash reaction to what we saw this morning, and they write that actually the slower growth in modernization sales likely to be a drag on 2025 earnings. What would you add to that?
Yeah, so we grew modernization sales in the fourth quarter almost 17% year on year. So we're seeing that double-digit growth for the full year. We were up close to a double digit. We've guided probably conservatively in modernization. It'll be high single digit, but we're going to push the team to do more. The service business, though, the repair and maintenance business, which is our core, that's the required maintenance business that we make sure your elevators are working, they're meeting all the code and certifications. All of that work is growing well, mid-single digit. We've done that now for 3 straight years. We've grown it over 4%, about 4.2%. We're going to continue to grow that. And that, again, throws off over 24% margin, as you saw in our results. And it has been the reason why, since we became independent again, where we've had really EPS and margin growth year after year.
All right, Judy, really great to get some time with you on a busy day, I'm sure. That is Judy Marks of Otis Worldwide. Meanwhile, we turn back to these markets just over an hour into the U.S. trading day on this Fed day. A little bit of a downdraft on the S&P 500 right now, down about 0.2%. When you take a look at the sector level, it's being led by big tech, and you're seeing that reflected in the Nasdaq 100, currently off by about 0.3%. The bond market, you're going to look at that 10-year yield and call it exactly unchanged right now, camped out at 4.52%. It's going to be fascinating to watch that line in particular when we get to the Fed meeting a little bit later today.
I'm so nervous.
Why?
Is it going to go under or over? I mean, that was the danger zone. Maybe not anymore. I don't know.
Yeah.
Anyways, we're looking at some stocks this hour, too, because earnings still rolling in. Starbucks reported better than expected results as the company's turnaround plan showed progress. You've seen a buildup in the shares all morning, up only about 5% off the highs, but still higher today. T-Mobile up almost 9%. A big earnings beat there. Growth in subscribers for mobile and home internet customers as well. ASML rising as the AI boom is alive and well, fueling demand for its chip-making machines, up more than 5%. We're going to hear more about those CapEx expenditures from big AI names tonight. Those are all down right now. Microsoft, Meta reporting after the bell, and results from Tesla. Microsoft and Tesla now down more than 1%. Let's see if they could turn things around. This is Bloomberg.
Well, the emergence of China's DeepSeek has sent AI investors scrambling, but TCW thinks it's ultimately a positive development for the space. The company's artificial intelligence ETF, the ticker there, AIFD, invests in companies across sectors, leading to the development of the technology. And I'm pleased to say that joining us now is Jennifer Grancio. She is TCW Global Head of Distribution. Great to see you in person.
Great to see you as well.
So let's start, of course, with AIFD. You invest in a lot of these companies that are disrupting with AI, but they themselves were disrupted this week, to put it mildly. Talk us through why you think that this ultimately is positive, because there were certainly a lot of people running to the exit doors on Monday.
So we've been investing in AI for 8 years. So this ETF that we have, AIFD, great way to get exposure to the theme. But again, we've been doing it for 8 years. And so our view is we're still really early. We're 8 years in and we're still very early. So what we saw on Monday is we saw an innovation that potentially shortens compute time. That's great. The innovation doesn't mean we fully have met all global demand, as we have more and more companies try to use AI more aggressively. So we were going to have these disruptions as things move forward, but it's important to hold a broad set of companies in the portfolio, in our view, to get exposure to the trend really as it develops.
Well, to that point, you take a look at AIFD, the portfolio that you've put together there. It looks like you have 35 holdings thereabout, and it's actively managed. And to that point that you're putting together a broad basket here, how often does the portfolio turn over? How actively are you adding and taking members out of that portfolio?
Yeah, at TCW, from an equity perspective, we're very fundamental investors, so we look at each stock very carefully, as well as the broad theme. And the portfolio does not have very high turnover, so we're always looking at best ideas and moving names in and out, but it's not turning over rapidly. An interesting kind of way of thinking about how AI is developed and what maybe is to come is, in the 7 years we've managed this strategy, about 70% of the return in the portfolio actually comes from smaller names that are not in the S&P 500 today. And so we have some of the bigger names. They're at lower weights than an index would hold them. And there's a lot of other companies in the portfolio that we're watching so that investors can take advantage of that growth.
You know, it's interesting because this is an ETF that has outperformed the market over a 1-year period. Maybe that is some of the reason why. Are those names perhaps more immune to that DeepSeek moment that we saw a little earlier this week? You saw NVIDIA just so bid up, and then some of that taken off the table certainly this week. But are there maybe gains to be found elsewhere? Is that really what this story leads to? at the end of the day.
Yeah, for sure. And that's also why we think in this space, an active manager, where that's our job, is to really understand the space and be looking at the different names and how to get investors growth as we move through time. So the AIFD does have exposure to the Mag 7, but at a much lower weight than the index. And we have other names in there. For example, Aristia Networks is a company that is helping within a data center. It helps parts of the data center work together effectively to improve efficiency of a data center. So that's an example of a name that's not NVIDIA, but is really critical to whatever the next version of the chip is that wins as we move through this AI trend.
And I want to talk about another one of your ETFs that definitely was caught up in the sell-off that we saw earlier this week. That is NetZ. That is your TCW Transform Systems ETF. And this is all about how energy and power are sourced, produced, and consumed, and how they're transforming, basically. This fund in particular fell about 8% on Monday. And it just feels like it's not just necessarily the big tech names, that plenty of parts of the AI supply chain are being touched by what we're seeing unfolding with DeepSeek and that conversation around the build out right now.
Yeah, I mean, absolutely. And if you think about both AI and energy and power, so what NetZ does is it very broadly is investing in energy and power. We're in the middle of what effectively is going to be bigger than the Industrial Revolution in terms of demand for power and how we get and use power. So huge megatrend. And so if you look at a strategy like NetZ, again, we manage it actively. We've been doing it for 3 years now. It turns three next week.
I remember when it was born.
And it's been a great strategy. It's significantly performed above the index. Year to date, even with Monday, it's outperformed. And so from a way to invest in these trends, you're going to have old economy companies like ConocoPhillips, Chevron, Exxon, who actually are doing a very good job with natural gas and low emissions and CapEx spending. And then you're going to have new companies like Vertiv that cools data centers. And there'll be a little bit more volatility in Vertiv, but we think there's a lot of growth there still looking forward.
You know, a lot of people want to talk about AI, but today people also want to talk about the Fed, which brings me to the bond market. And if you think about what's possible in the world of fixed income ETFs, how are you watching clients engage with that space right now?
I think what we see on the fixed income side is that finally ETFs have arrived and the market has realized this great vehicle works in fixed income as well. And so from a TCW perspective, we converted a mutual fund into an ETF, Flexer, which is almost doubled since we converted it to an ETF. So there's some information about the market for you right there. And our view from a fixed income perspective is that people are going to need income to deal with longevity, deal with inflation. And so a strategy like Flexer that gives you total return, but also is managing up towards an income target. There's a lot of demand for that right now. And we've also launched a range of products that let people get exposure to other higher yielding parts of the market.
I'm glad you brought up conversions. Converting in a mutual fund to an ETF, we've certainly seen a lot of issuers go through with that to sort of capitalize on the tax efficiency of the ETF wrapper. And when it comes to your own ETF lineup, of course, you have, I think, less than a dozen or just about there when it comes to your ETFs. How are you approaching launching new products versus the conversions?
Yeah, I think that in general, from an industry perspective, if as an asset manager we have a great strategy with a track record, and it's not primarily used in retirement accounts or people like mutual funds still, it's a great opportunity to convert it, and we can help existing clients improve tax efficiency, and then we have the vehicle that the market prefers. So for us, a lot of the ETFs we have today are conversions because we have a product that has a great track record, and we may as well bring that same track record into the ETF.
Well, certainly an issuer to watch. Great to get some time with you. That is Jennifer Grancio of TCW. Meanwhile, a quick check on these markets as we count down to the Fed, as we count down to big tech earnings. You can see we're going down when it comes to the actual stock market right now. The S&P 500, the Nasdaq 100 off by about 0.3%. The bond market, that color had been green, now it's red, but these are small moves overall. The 10-year Treasury yield currently at 4.53%. We started a little bit closer to 4.5% when this day kicked off. We'll see how it changes over the next couple hours, but that does it for me and Sonali for now. Coming up tomorrow on Open Interest, Blackstone President Jonathan Gray, Ellen Hazen of FL Putnam, and the CEO of Tony Roma. This is Bloomberg.